Hello everyone. I have prepared a strategy video that I am sure you will enjoy, but first of all, I want to thank you for the interest you have shown in the channel. Your subscription and hitting the like button motivate me to work harder and teach you many different strategies. Before we start with this video, I want to emphasize that I am counting on your support. Let's start learning our simple and great strategy for making profits. Please, first add the indicators I have brought to the screen and optimize their settings. Many traders find fixed risk-reward levels like 1, 1.5 or 1, too inadequate and boring. It's not necessarily a wrong perspective. Of course, pursuing higher profit targets comes with different risks. In this video, we will learn how to minimize these risks using which indicators and how to aim for higher profit ratios. Let's look at our first example. As you can see here, there is a large red candlestick, and simultaneously, there is a red column in the volume spread analysis indicator confirming the high volume of this candlestick. Furthermore, the moving black line of the chop and trade zones indicator has crossed below the blue-colored pivot line. This appearance in the indicator indicates that the selling pressure in the market persists. The further the black line moves downward away from the blue line, the increased selling pressure it signifies. Conversely, if the black line crosses above and moves away from the blue line, it indicates an increase in buying pressure. Let's again establish a template rule in the form of a 1-2 risk-reward ratio, but let's not consider this point as the ultimate target. Let the 1-2 ratio be our initial goal. Now, let's see how to prudently track higher targets. After entering the trade, we draw a clear support line at a significant level. We observe that the price action has been in a horizontal trend for an extended period, and at the end of this trend, it broke below the support line. At the same time, you can also see that the chop and trade zones indicator is still running below the blue pivot line, confirming the selling pressure. And again, after breaking the initial support line we drew, the price compressed into a narrow range and moved sideways. Once again, we draw a support line at the lowest level formed by the price action. In this way, we are trying to progress step by step towards our profit target. Of course, our guide during this step-by-step tracking is the chop and trade zones indicator. Since the black line is still continuing below the blue line, our trade is still open. Our third drawn support line, which was broken to the downside, is eventually crossed in the opposite direction by a high-volume green candlestick in the area you see after some time. Despite the chop and trade zones indicator still confirming the selling pressure, due to the possibility of this upward and voluminous movement in the price action being a trend reversal, taking some profit and adjusting the stop-loss level to the entry point will preserve all our efforts and the profit we have gained. Of course, we are still continuing to pursue higher targets. And we have achieved the 1-2 risk-reward ratio that we set as our initial target. As you can see, we have come step by step to this target. If you are not making a profession out of this path, like scalpers who open and close trades within minutes while constantly monitoring the screen, don't worry. To gradually move towards a profit target, you can trade in a time frame that suits you. For example, if you have only a limited amount of time each day, you can trade on the daily time frame, checking the single candlestick formed each day, and then close your screen. Now let's return to our main goal. Even though we have reached the 1-2 reward level, the black line of the chop and trade zones indicator is still below the blue pivot line. It indicates that the selling sentiment in the market is still prevailing. Of course, closing the entire trade can be a positive choice, especially since we have reached such a nice level like 1-2. However, For traders who want to keep the trade open, it is crucial to pull the stop-loss level to the entry point, ensuring zero risk. This is extremely important because, remember, no financial asset always falls or always rises. After a while, the black line of the chop and trade zones indicator crossed above the blue pivot line. At the same time, the price started to move above the old support lines, which we had previously drawn, now called resistance lines since the price is below these lines. Now that we can no longer talk about selling pressure in the market, we have to close the remaining part of the trade. It would be incorrect to call those who keep the trade open after this view investors to earn more profit. However, calling them gamblers would be a fitting description. Now let's look at an example of a long position on the same strategy, and later, let's learn a different way to profit by exploring a different strategy. Watching without leaving the video ensures that you don't miss the small but crucial details in the trades, allowing you to make much more effective trades and rapidly grow your capital. On the screen, we see a red bar with a red ultra-high volume column in the volume spread analysis indicator. At the same time, a large-bodied green bullish candlestick responds to the downtrend, making the presence of the buying group felt in the market. Similar to the short position stage we observed before this example, we again progressed by drawing a new resistance line at each formed peak level, and the price reached our initial target, the 1-to reward ratio, without challenging us. Now, let's see if we can go beyond the upper levels of the 1-to ratio by pulling the stop-loss level to the entry point. Of course, the black line of the chop and trade zones indicator, which enables us to continue, is still below the blue pivot line. In the ongoing price action scenario, candlesticks rapidly descend, crossing support lines, but the chop and trade zones indicator persistently indicates buying pressure, with the black line consistently above the blue pivot line. Here, whether the trader chooses to close the trade due to the sharp reversal in price action or continues based on the trend indicated by the chop and trade zones indicator is optional. However, I want to emphasize a crucial detail. It's important not to forget that the further the black line of the chop and trade zones indicator moves away from the blue pivot line, the stronger the pressure in that direction. However, as the two lines approach each other, horizontal movement in the market and a sudden trend reversal become possible. This time, the trend turned sharply downward as indicated by the price. Traders who acted according to the price movement were able to close their trades at an acceptable level. However, traders who kept their trades open also automatically closed their trades due to the stop-loss level they pulled to the entry point. In short, everyone is profitable. Now let's try to increase our capital using a different indicator. We will remove the chop and trade zones indicator and replace it with the MACD 4C indicator, optimizing its settings as shown on the screen. The dark green and dark red columns in the MACD 4C indicator indicate a downtrend, while the light green and light red columns indicate an uptrend. Please do not forget this detail when looking at the indicator within the context of this strategy. On the screen, we see a large bearish candlestick, a red ultra-high volume column in the volume spread analysis indicator at the bottom, and a small dark green column in the MACD 4C indicator indicating a downtrend. Now, these criteria indicate the formation of a short position environment. Of course, with the convergence of all these criteria, we have reached our initial target shaped as a 1.5 risk-reward ratio. Now, let's draw a clear support line at the formed low level and try to progress by taking profits step by step as support lines are broken, gradually reducing the remaining funds in the trade. We see that a support line formed at the 1.5 level is broken to the downside, and at the same time, the MACD 4C indicator is entirely below the zero line. Now, in order to take a longer profit, we are not considering the open and dark colors of the MACD 4C indicator. We are only looking at its movement below or above the zero line. Yes, the price has formed a new clear low level. We draw a support line here as well. The fact that the MACD 4C indicator is below zero gives us the possibility to continue. We see that the last formed low level is also broken. Now, due to the consolidation zone formed in the area marked with the gray frame, some more profit can be taken up to this zone. Again, after the formation of a new low level, buyers come into the market, pushing the price upward. However, this action can only last up to our initial level where we received a 1.5 reward and loses its effect. Since the price has returned to a new lowest level, you can take some more profit. And finally, the buyer group made a very strong entry this time, pushing the price above our initial reward ratio. Now, we have to close the entire trade. I'm ending the video here without extending it further. Please don't forget to subscribe, hit the like button, and leave your thoughts and questions in the comments section. Goodbye.